to today's stream. We have a lot to cover off. Obviously, it's Monday. Obviously, I'm excited. Wait, just double check. It's Monday. Yeah, it is Monday. Fantastic.
Yeah.
Maybe I was
bank holiday here in England.
Oh yeah. What's it for?
I don't know.
I don't know, just holiday, innit? That's good. But we have a lot to cover off. We are going to look at the fear and greed index. We're going to look at money flowing in and out from institutions, and then also going to have a look at something. Well, two different things that might be affecting the markets quite heavily this week. One is non-farm payrolls, and two is Mt. Gox. People are worried. Oh, there's going to be so much Bitcoin. We're going to have a flood, and it's all going to go down. I mean, I think it's going to go down anyway, but I'm not sure if only Mt. Gox is the reason why.
Yeah.
So a lot to cover off. I'm just going to quickly jump in first things first. Having a look over here, fear and greed index. AJ, it hasn't been like this for, I don't remember when the last time we were in extreme fear. It must have been a couple of weeks now.
Say it on the side there if you scroll up a little bit. Last week.
No, I mean last month was still, I'm going to go down here on the 7-day. Right, fantastic. Month. Okay, 3 months. Here. Okay, is extreme. Where? Okay, so we haven't kind of reached these levels since July. That's actually quite good. Around about this time, we've had these little bit, like 26, for example, but dropping below that 25 level, at which today, 24, it's not looking good. And I think part of that, in fact, a big part of that is probably due to what happened in the markets on Friday. We all know Jerome Powell was speaking, wasn't
he?
Yeah. Whenever he does that, there's usually something that goes wrong.
Which big reaction in the markets.
Yeah,
exactly. Never the way we want them to go as well.
No, exactly. You're absolutely right. But basically, what should I say? The feedback that everybody has from this, even in the Chinese markets this morning, they started selling off on the back of obviously Friday evening in the US. They were then selling off. So it's kind of continued through to this week. And obviously, it's just a risk-off sentiment. Everybody is pretty much pricing in that 75 basis point hike. I'll come back to this later on, but we will look at it and just kind of quickly continue on. People are now looking at the US Treasury Futures and also S&P Futures kind of selling off. So ever since that Jackson Hole discussion that we had on Friday, there's just been a continuous kind of sentiment of everyone being a bit worried. So I want to see how this kind of progresses throughout the day, but it basically is just like everyone's worried. And everyone's unsure. So there are some other issues that we see, in China, for example, everyone's talking about their whole economy collapsing.
Yeah, and after that Jackson Hole meeting and then Jerome Powell's speech, we saw lots of uncertainty after. Normally, when you hear Jerome Powell speak, there's either a move towards the upside, an obvious move towards the upside, or an obvious move towards the downside. But as he was speaking and after he spoke, we saw lots of uncertainty. It was just sort of sideways movement, price action. But then a little bit lagged behind. We did eventually see that pullback. But yeah, there was a lot of uncertainty during he was speaking and sort of a few hours after he was speaking, and then it sort of settled into the market where we then got that big pullback over the course of this weekend.
Yeah, and I think for stocks and stuff, they don't have to the markets close at a certain time. So as an investor, you probably want to close off your stock positions and kind of get out of any losses. And with crypto, obviously, you can do that over the weekend because it's open all the time. So that might have been a bit of a reason. But you can see here from a Goldman strategist, tightening pain equals dollar gain. And this is the DXY. Should we have a quick look at the DXY, AJ, on a much kind of closer time frame, and then we'll get into institutional money in and out?
Yeah. The DXY is something that we are looking at very closely at this moment in time because it is going to be a big catalyst for the for the price movement for the whole crypto market and the traditional market as well at this very, very critical level at 109. So looking at this resistance, we've had previous resistance here before. And as of yesterday, we came and tested this resistance level again. But as of today, we are getting that perfect rejection. Now, if we can get that rejection, that's great. And we can continue not continue, but if we can get this DXY to have this pullback, that will be great for the traditional market and the crypto market. But if we get above this resistance level here, if we do get that break above this resistance, it's incredibly bearish for traditional market and the crypto market. And then the next level that I would be looking at the DXY coming up to would be the $112 level. That would most definitely push the price of the traditional market and the whole crypto market down as well, everything. So it's not looking too good if we break this resistance, but only if we break that resistance. If we do get this rejection and this pullback, then we could see nice price action towards the upside in the traditional market and the crypto market.
And I think a lot of this kind of depends on some of the tightening that we're going to go through from the Fed.
Yeah.
So it's going to be having a look at when we see this here, what are we going to be expecting? Obviously, we know that last week we were kind of looking at, and even the week before is much lower than this, but we've pretty much solidified now 75 basis point hikes. I've kind of said it all the way through, even though I didn't like the fact that people just thought, actually, maybe we'll have a 50 basis point, because it's just not going to work. So I think there needs to be more tightening now, and I'm pretty sure there will be, but it's okay that this is kind of being priced into the market now. So we are seeing a bit of downside, but I think we're not going to have any shocks whenever that does happen. And then, we also have some estimates as to where we're going to end up. So 75 basis points September, 50 basis point in November, and then kind of finishing up most likely with a 25 here. But it has affected, this whole fear has affected how much money is coming in and out of crypto itself. So this is basically the digital asset fund flows from institutional investors. So they invest in these different funds, to basically have some exposure to crypto. And we see Bitcoin lost an awful lot. Ethereum also lost as well. The only thing that gained was short Bitcoin, which is not great. That's the opposite of what we want. We did see money coming out, and I think that's again maybe that was towards the end of the week. When we did have that level of who knows what's going on with the Fed. But I just wanted to kind of bring that to your attention. And a little bit of fun news. MTV Award features Snoop Dogg and Eminem as Bored Apes. This is the first metaverse category. So, I mean, look, I don't think this is going to be majorly futuristic. I don't think it's going to be majorly catalytic. I just think it's a little bit of fun, AJ. It's kind of giving a mainstream, platform some exposure to NFTs.
Definitely. And whilst we're on the topic of NFTs, I don't know if you've witnessed this. I know this is the first time I've brought this up with you as well, but I know there's some talk about there being a sort of 2008 housing market crash scenario happening in the NFT market because of lending platforms. So a lot of people have put their NFTs up onto a lending platform, and so you put that up as collateral, and they give you.
Oh, you can borrow against it. Yeah,
borrow against it.
So you can borrow against the value of your NFT, and now the NFT is worth nothing. So they either take your NFT. Well,
it's coming up to sort of their liquidation price, and when it comes up to their liquidation price, the lending platform has to sell the NFT to get the money that they have lended you back. And a lot of NFTs are getting to that sort of liquidation price. So there is going to be, and I'm not sure on the exact number. I'll have to go into more research about it and maybe make a video about it. But there is a lot of NFTs on these sort of lending platforms, and a lot of them are very, very close to that liquidation price. And people are speculating when if those liquidation prices are hit, there's going to be a massive spiral effect where the whole NFT market is just going to crash. So that's something that we may have to look into.
That is very, yeah, we'll have a look into that, because that it genuinely could be very, very bad for NFTs. I mean, NFTs, they're already, they're very they're just very bad in terms of the capital gains so far this year. They've dropped by easily 60%, which I know that there's a broader market sell-off, but NFTs are slightly different to just traditional Bitcoin, they seem to have a little bit more use, should we say, in terms of what they're used for. But yeah, we'll look into that, because that could be really weird. I know.
And especially if the price of the crypto market continues to tank, to fall in price, then we are most likely going to see these NFTs fall in price as well. And
it's just a lack of demand, isn't it?
It is, and then we do have these people talking about this spiral effect of where NFTs is just going to have this massive sort of 2008 housing market crash scenario happen in the NFT market. So it's quite interesting. We'll have to.
Yeah, I think that there is a lot of, there could be a lot of use, like this, for example, and I know some people have tried, they've opened up, because if you buy an NFT, you get all the rights for that. So you can use it for, opening up your own burger restaurant and having the NFT on the face of the burger, for example, which has been done. Someone was going to create this is kind of jokes, actually. He was going to create a Netflix series or a TV series with his NFTs, but his NFT wallet got hacked and it got stolen, so he no longer had the rights to create to create this TV show. He was obviously livid about it, but it was actually kind of funny. And then he tried to get it back and all this, and he was like, "Oh, I'll buy it back off of the person who hacked it," But I think that there can be use in the future, but I think just right now it's a little bit up in the air. But I will just finish off before we get into some major kind of technical analysis and what we're looking for. Just a quick observation that crypto is braced for a $2.7 billion black swan after $1 trillion of Bitcoin, Ethereum, blah, 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 price crash. Now, what they're saying is the black swan event. Let me see exactly where they have. Oh, that was rubbish. I know it continues. I was like, that's such a short article. What's going on? But basically, I think part of what they're saying is the interest rate hikes, which obviously we've just mentioned. So yes, Ethereum's major update and another Federal Reserve interest rate hike. So let's look at, firstly, Mt. Gox. And I mentioned this here. The creditors have dismissed rumors of a massive Bitcoin dump. And this is because they're unable to register where their funds should be sent. But we have to be aware, guys, in the next couple of weeks, I believe, or in the even shorter time period than that, people will be able to unlock some of the Bitcoin that they got from Mt. Gox. Now, you might think, why would you take it out now when Bitcoin is so low? But a lot of these guys were buying Bitcoin for $200. Hang on, about maybe it was this. Yes. So anything, up to $540 a piece, which is when Mt. Gox collapsed. And that all kind of got stuck. Now, the guys, basically, if you put your money in there, you have two options. Either you take it out now, or you wait until the US government does a full recovery of all of the assets, and you could have more than, whatever it was that more than what is available to be recovered. So there's two ways, but, I don't think that it's on, that it alone would be able to crash the market. I do, however, think that it could cause this massive kind of fear, and then also people are talking about whether Ethereum merge is going to go through. How do you feel about the Ethereum merge, AJ? Do you think everything's, on track? Are we looking good, or are we slowly walking into
a death trap?
$10 Ethereum.
Skeptical, very, very skeptical about it. They haven't sort of hit their targets previously. So it's like,
that is true.
When are they ever going to hit their target? Obviously, they are going to have to hit their target date at some point, and when that is, I'm not sure. And I don't know how's it going at the moment. Has been any more hiccups with it?
Well, I think everything so far it seems to be going well. They obviously they had that delay, and then they did have a bug, but they managed to fix it quite quickly. And they said, "Oh, actually, it's not going to change anything to do with the delivery date," which is a good thing. But the question then still stands that like I think because there's so much hype around this, it has to go seamlessly.
Yeah.
Otherwise, that will kind of, you'll end up with a scenario like behind you, AJ, sorry, you have in your, yeah, exactly. This is what might happen if if Ethereum messes up, and let's say, we move on to the beacon chain and things crash for like 5 minutes, 10 minutes. We will end up very much like that you have in your in your background. The world
Yeah,
might
and
end.
a lot of people are sitting on the sidelines with Ethereum. A lot of institutions are sitting on the sidelines, not investing as of yet, waiting for that merge to happen. And for me,
That
I still
uncertainty, isn't it?
sorry uncertainty. Yeah,
Yeah, that uncertainty. Like, it's like I'll get in, but I need to know it works first.
yeah,
You know,
yeah.
and
And
right
for
now
me,
people don't.
I do think there's going to be a big sell-off for Ethereum after the merge. I do think, we
Buy the
tend
rumor, sell
to,
the news type thing.
yeah, I do think, we've seen that before. So I think that is something that is potentially going to happen. So for me, if I was going to be putting any major amounts of money into it, I would probably just hold off and wait to see what happens after the merge, because yeah, I do think we could see a sell-off after the merge happens.
Yeah, it will be interesting. It'll be interesting. Should we have a look at some Ethereum price action
Yeah, yeah,
and see how that's reacted? Obviously, guys, Bitcoin is going to be the number one, the star of the show, and the one who kind of drives the market.
yeah.
But still good to look at. Bitcoin and Ethereum seem very similar in terms of their breakouts and stuff like that at the moment.
Yeah, they do. So let me just bring up this chart here. Let's go 12 hour. So taking a look at Ethereum, bring my screen up for you here. So obviously we've had that break towards the downside of this rising wedge, exactly like we had on Bitcoin as well. We also had a decrease in volume as well. Only well, it wasn't a massive decrease in volume, and it's still a decrease in volume, which was giving me sort of those bearish signs that we were most definitely going to break towards the downside out of this rising wedge. That's what happened. We had this support level here, major support previously, major resistance previously. And we broke that as well. So then it became resistance. We broke, once breaking that, we did actually come and test it as resistance, literally to the dollar as well. Got that perfect rejection, and then that's why we've seen this next leg down. Now, looking at the price targets, I do still think that these price targets are going to be met. So the first take profit point is $1,350. I do still think Ethereum is going to hit that price target. And then the final TP is sat at a little over $1,000. And I do think if we do continue to have that leg down for Bitcoin, which I do think is very, very likely, then we are most definitely going to see Ethereum come down to $1,000 as well. So Bitcoin hasn't quite yet hit my price target, and obviously we'll go through that in a minute. But my price target for Bitcoin is around 19,000 for the shorter term. It hasn't quite got there. It got to $19,500, $600. We'll have a look at that in a second, but around that area. If Bitcoin does come down to 19,000, I do think Ethereum is going to hit this first TP, which is at $1,354 approximately, $55. If we do break below 19,000 on Bitcoin, then Ethereum is most definitely going to come down to 1,000, because Bitcoin is going to have another big leg down, another big capitulation stage. And so this is what I'm looking at Ethereum. My next target is still $1,354 approximately. I wouldn't be opening up any short positions now if you didn't already open up a short position up here at the breakout or at the rejection from the retest right now, because I do think we are incredibly, incredibly sold. So I do think maybe a little push towards the upside before that move towards the downside again is something necessary. But yeah, I wouldn't be entering any short positions now. If you're entering now, you have sort of missed that. You've missed those entry points. But yeah, if we did come back up to the resistance, which I think would be quite unlikely, but it would be likely to happen if we did get a rejection on the DXY, which I showed you a minute ago. But if we do get that breakout on the DXY, which I do anticipate we are going to break that resistance on the DXY, then that's just going to bring the whole market down. So that's sort of what I'm looking at for Ethereum. Just that $1,355 target approximately is the next target I'm anticipating Ethereum coming down to.
Yeah. And let's have a look then at Bitcoin. Is that kind of similar, following a similar story? Obviously, at the moment, a little bit of push to the upside on on these larger time frames. You see a couple green candles, but overwhelmingly, it kind of doesn't look too good, does it? It just
No,
it
it
looks
doesn't.
exactly the same, but it just
They do
doesn't
look
look positive.
So this is the 12 hours hour as well, and yeah, they look exactly the same. We've had that rising wedge which broke towards the downside right here, broke this level of support here, which is obviously now going to act as resistance. You can see previous resistance, previous support, support along here, support along here. So it has been a critical level. We did break that, and that's why we've got this massive leg down. And then we actually, if we zoom in even more to, let's say, the 4 hour, the 4 hour, we did have this bearish flag. This bearish flag actually broke towards the downside. As you can see, we broke towards the downside right here, and then we got that next leg down as well, breaking through this support at $20,800 approximately, which I told you was a TP point as well after the breakdown here. That was one of the TP points, and then the final TP point, which I've been speaking about, is well, it says here $18,900 approximately, but on another chart it's $19,000. I'll show you that in a minute. But yeah, we got this bearish flag, the smaller bearish flag, within this bigger bearish flag on the daily that we are in. Again, I'll go on to that in a minute. But yeah, we have had this break towards the downside of this bearish flag. Now, my target for this is $18,500. That is the target for this bearish flag, and I do think that price target is going to be hit. If we do come down to that $19,000 level, we'll most likely have a wick underneath it. But 19,000 is a very, very strong support level. Looking at this chart here, this is the daily charts. This is what I've been speaking about, the $19,000 level, major support right here. And this is the bigger bearish flag that we are in. Right now, obviously, we've got a break towards the downside of this big bearish flag. The price target is actually 12,000, but we came up and tested this resistance. We were in this resistance for 5 days, trading within a $1,000 range between $20,900 and $21,900. So a very small range that we were trading within for 5 days. And this was a major resistance level. You can see previous resistance right here, previous support. And we were finding it so difficult to get that break towards the upside of this resistance level. And then we saw that pretty harsh rejection, which almost definitely made my anticipation of that $19,000 target to be sort of 99% sure that it was going to hit that target. And I do still think 19,000 is going to be hit because we are below this resistance, major resistance. And the next level of support is at 19,000. So looking back previously, major support here. And if we do come down to this $19,000 level, it is going to hold us up as really nice support. Now, if we do break below it, this is sort of my what you call it? This is sort of my last level of support before absolute destruction.
Feeling good.
Yeah, worst case scenario, 19,000 is a break below 19,000 is very bad, but a break below 19,000 is sort of a confirmation to me that 12,000 is that next target that we are looking at. Which
I saw something from the Moon Carl, the guy who lives over in Dubai. He said he's going to sell his Bugatti if Bitcoin gets to 13K. Should
Okay.
we just short squeeze it?
It's not that's quite a smart move, I think. 13,000. If I had a £2 million Bugatti, I'd probably sell it as well and
Yeah,
buy
buy some more Bitcoin at
more
13K.
Bitcoin. Yeah.
Yeah, exactly.
And then you can buy 5
And then buy
Bugattis.
2 Bugattis. Yeah.
Or 2, yeah.
Yeah.
But yeah, I do think 12,000 is pretty likely if we do break below 19,000. Why 12,000? Because we have the bearish flag targets, price target, which is sitting around 12,000, but also the next level of support below 19,000, which also lines up with the previous all-time high from 2017. So you can see how strong that $19,000 level of support is. And this brings out another scenario as well, because it's such major support. Let me just draw this support box up there, drag that support box up there as well, because it's such major support. If we zoom into where we currently are right now, and I get rid of this right here, you can see that we could potentially form a double bottom W pattern before then getting that massive move to the upside. That is a potential as well if we do continue to hold the $19,000 level as support. But if we do break this $19,000 level as support, looking at this chart here, you can very clearly see there is no support at all. There is no support coming in between the $19,000 level and the $12,000 level on this weekly chart here. So my next target would be down at sort of that $12,000 level. You can see major resistance previously, so it's obviously going to act as major support if we do come down to it. So that is what I'm looking at on the weekly chart. And for the DXY, if we do get that break above 109, I do think we will come down to 19,000 and potentially even break that $19,000 level if we come all the way up to that next price target on the DXY, which is 112. And yeah, that would most definitely break this $19,000 support if we were to get that break and that big move on the DXY. And then, yeah, 12,000 is something that I'm looking at. But we also have another indicator. I just want to show you quickly. I posted this on Twitter this morning. So my current favorite single metric bottom model for Bitcoin is the cumulative value days destroyed, created by this is Willy Woo, and it's a funny name, isn't it?
I wasn't going to say anything.
Willy Woo. Yeah, so the CVDD has correctly predicted the bottom of the last 3 bear markets and is predicting that the bottom of the current bear market will be at $15,614. So what I mean by this is this CVDD here, this pink line, has predicted the bottom of the 2011 bear market. It's predicted the bottom of the 2015 bear market, and it's predicted the bottom of the 2018 bear market. Right now, it is a moving average. It does vary, but right now it's sitting at $15,614. That is what the CVDD is currently predicting the bottom to be. Now, obviously, it's going to vary slightly. I remember when I first showed you, it was $15,300. So you can see it's increased a little bit. So it is going to vary. So it's not going to be that exact number that the bottom will be. But potentially, this could be a very trustworthy indicator to go off because it has predicted the bottom of the last 3 bear markets as well. So that's another thing to look at. So that's obviously going to be support as well. When the price action meets this CVDD, then we can sort of talk about this in a bit more depth and see whether we find support along that CVDD or whether we get a break below that CVDD, which will sort of invalidate this as anything, and we can sort of scrap that, and then we can look at the 12,000. But yeah, a break in 19,000, I would then be coming to this CVDD, looking at this CVDD bottom prediction, which is currently at $15,600 approximately. And that would be my next support level. If it broke below that, it broke below the CVDD, then 12,000 is most definitely that next target that I'll be looking at. So yeah, that's all I've got for you really on the technical side of things. the sort of chart of the day really is the DXY. This is what we need to be keeping a very, very close eye on at the moment. If we do get a break above this resistance level here, then we could see major capitulation in the crypto market and that massive leg down.
Yeah, I'm just going to quickly answer this question here from Trev Turner. Do you think the US market will drop further when it opens in 1 hour? Let me show you this. So this is currently the live price of the futures market. So basically, when you can't actually trade things like, because the market's closed, you trade futures. So this is where we're currently at. This was the close on Friday. The futures closed at 12,600. Currently, this is where we're at now. So 12,488. So we have seen a move to the downside. Do I think that we're going to have, this is quite cool. Love a bit of little crypto to the moon. So I've lost my train of thought here, but do I think it's going to crash? I don't think it's going to massively crash. I do expect to see volatility throughout the day, just because we were on that downward trajectory ever since we had that news from the Fed. Can you bring up the Nasdaq, please? What's your name, AJ? Just to have a quick look at that and see what that's looking at doing in kind of the short term. I'm going to bring it up for now.
Yeah, so I do have a theory on this.
This little gap. Okay. So
I will go through that theory. But yeah, so we've had this rejection from that resistance there. My theory is that yes, we will go down. My reason being is because looking at this candle close here, which was on Friday, you can see that there's no wick underneath it. That signals to me a lot of selling pressure. A lot more potential selling pressure that's going to come in as well, because no one has bought the dip. No one's been buying the dip up because there is no wick. So for me, I do think, I could be wrong, but I do think that we are going to see a pullback when the market opens.
Yeah, I mean, I personally, I wouldn't be going long. I'm actually very hesitant to be going long this week, especially in the early stage of the week. Not because we can tell the future or can't tell the future, but basically just because there's been so much worry over the weekend, so much uncertainty, inconsistency throughout the traditional markets that we do have to take into consideration that this week is all around. How much is this 75 basis point thing going to last? Is it going to be really, really bad for the market, et cetera, et cetera? So it's that investor sentiment. And I think, yes, we're seeing a bit of a push to the upside. This might just be resetting the indicators, or it might even be a bit of a push. But for the moment, I don't feel as though right now we have the full picture. So I want to see what, how the US market responds and reacts to the first couple hours of trading. And then I would kind of feel confident about getting into a trade. But yeah, being able to say whether it will or won't drop as soon as it opens is hard to say, It
is
we are low, but we're on a downward path, unfortunately.
Yeah. And what you said, adding on to what you said, letting the indicators reset, that's exactly what needs to happen. And I told you this at the start as well. I think this is exactly what needs to happen. I thought it would happen over the weekend. It didn't. We just saw more downside over the weekend. But yeah, I do think a recovery is something that is needed before we get that next leg down. Looking at this 8-hour chart, shows this perfectly. So we've got a bullish divergence coming in. That's we've got the high highs on the RSI, we've got the lower highs on the price action chart. This is indicating that we are going to have a push towards the upside, potential push towards the upside. Looking at the indicators, I'm losing my words there. Looking at the indicators as well, the stochastic RSI is very, very oversold as well. And you can see when we are in that oversold region, we do tend to see the indicator reset back up to the top. And when we do that, we do see, this isn't a very good example of it, but what we tend to see is either a push towards the upside or consolidation towards the upside. What we saw here was consolidation towards the upside. So we didn't see a major move towards the upside. We saw consolidation towards the upside. But when we do get that reset to the top on the stochastic RSI, it is either a move towards the upside. So let's take this one, for example, here. So this resets here where we were oversold and we came back and reset back into that overextended territory. We did see that big move towards the upside. So it's either going to be that and we get a nice rally towards the upside, resetting the indicators so that we can continue the price action towards the downside to that price target at $19,000, or we could see something that we saw here, which was that consolidation towards the upside, which most of the time almost definitely forms those bearish flags. And yeah, that would also indicate that we are going to get that next leg down as well. But yeah, in the shorter time frame, maybe a little push towards the upside just to reset those indicators. 8 hour, that needs a reset. So looking at the 12 hour, that also needs a reset, but there's no bullish divergence on there. But it's just on the 8 hour that the bullish divergence is on. But again, 12 hour, very oversold on the stochastic RSI. So I think a little push, just resetting those indicators. The RSI is very oversold as well, literally just sitting on that 30 level. And yeah, we just need a little push towards the upside before getting that next move towards the downside. And maybe looking at this chart here, we can form a lower high and then get that next lower low, maybe form some sort of channel. And yeah, we'll see what happens from there. But yeah, I do think a little push and then that next leg down is what we are going to see.
Yeah, no, I agree with you. Especially during this week. And what I'll do, guys, I'll just quickly jump off and do like a separate video after this. And it'll just be maybe 5 minutes explaining everything that's going on from a purely fundamental standpoint. So we've got a lot of news coming out for like inflation in France, for example, unemployment in Germany, inflation in the Eurozone, and just kind of what those might mean. And then also we've got the NFP. So the first Friday of every month, which happens to be on a 2nd of September, we have non-farm payrolls. So that's, again, it's a jobs report. And this gives us, it is a lagging indicator, but gives us an idea as to, how much unemployment there is in the US market, which we want that to be as high as possible. Which I know sounds bad.
Weirdly enough,
at the end of the year target is 3.7, and we're currently at 3.5. So let's stop people getting jobs. Let's do something good for each other.
It's quite funny. You want to fix homelessness, but
but I want crypto to pump.
Yeah,
that's so bad.
It's really bad thinking about it, but yeah.
Yeah. Hey, I didn't say homeless. I just said lose your job. Move in with your mum. He's the villain here. Is that you either die a hero or live to see yourself become a villain? Jokes. But yeah, so no, I mean, look, guys, overall, the sentiment this week is actually it's not great. I think we will see dollar index kind of pushing to the upside on that European uncertainty. But then also, I do think towards the end of the week, people will be beginning to position their bets because of that unemployment data, because that's going to be very fundamental. Jerome Powell said, look, we're going to be tightening, but we're going to be looking at the data. So they're currently looking at the data that's going to come out from this jobs report, and also the CPI that is in about 2 weeks. When that time comes out. So yeah, that's my 2 cents for this week on a Monday.
Yeah, and
12K is a real target.
Alexis Sanchez, 12K is a real target.
You're not alone in that.
Yeah, you're not alone. And you're not alone with that either. I know a lot of people are talking about that as well. For me, 12,000 only confirmed, as I said earlier, only confirmed if we break that $19,000. Just very, very quickly, why I think that, because look at how much support is coming in at 19,000. Previous all-time high from 2017. Major support here previously in July. And a bit in June as well. And we are finding support along that level right now as well. So yeah, this is going to be a critical level. If we do break 19,000, I think 12K is most definitely going to be hit, because there's no support on this weekly chart at all.
Can I add something in here? Notice how a while ago, all of the big institutions were talking about 12K, and a lot of retail traders said no. But this kind of shows me, the way that the like institutional traders trade, they go about it in such a different way. You know, they're looking at the massive time frames. They're not on those 1 minute time
Yeah,
frames or 5 minutes.
yeah,
You know, they're not day traders. They
no,
take a position and they hold it for not a huge amount of time. They're not long term investors. Obviously, they're traders, but they're trading on those longer time frames because that's when you have kind of more of that certainty. So
yeah,
just one thing I would always say is take a leaf out of their book and
yeah,
have a look at that.
yeah, definitely. Yeah, the weekly time frame is actually a really, really good time frame to look at, and I know not a lot of people do it. You know, they sort of look at the daily as sort of the biggest time frame, maybe the 3-day as well. But the weekly is really good, and it gives you a really good. We back.
Yeah, you're back.
Cool.
I was like, have I glitched or is he glitched?
Yeah. So looking at the weekly, just for an example, it really gives us a good indication of when tops are coming, but also when bottoms are coming as well. Looking, this is what I looked at when we were sort of around that $69,000 level. I was looking at this weekly chart. Not a lot of people were looking at this weekly chart when we were at just below 70. People were talking about 100K, but they weren't looking at bigger time frames like this, where we see higher highs on the price action chart, and then you go onto the RSI, and you're seeing these lower lows. That is just a textbook bearish divergence. And for me, when we were back here, I wasn't looking at these $90,000, $100,000, $200,000 targets.
320 if you're Bitcoin crypto.
Yeah, 320 if you Bitcoin crypto, exactly. Because we've got this massive bearish divergence, and bearish divergence, the majority of the time, they do play out. I think, I back tested this on the 4-hour and the 1-hour chart throughout 2021, and 75% of the time, these bearish divergences play out. So, this is what I was looking at. And, that's played out perfectly. That bearish divergence played out perfectly. So it just shows you that these bigger time frames are very, very important to look at. And as Ben said, this is what the institutions are looking at as well. So, yeah, this $19,000 level, major support. If we break that, then $12,000 is that target, and is the real target, as Alex said.
There we go. Well, look, guys, like I said, I'll jump back on pretty soon, actually, and just go through anything that I think we should be looking at for just for this week in terms of, fully fundamentals, kind of boil everything that we've mentioned here down into a 5-minute video. So, yeah, make sure that you stay tuned for that. But apart from that, as you know, number one rule, it's not use protection. No. It's not everyday dirty mind, AJ. Just hit the subscribe button.
Yeah.
I went to
Smash
church
that like
yesterday.
button as well. It really does help us out when you smash that like button.
Yes, yeah. And we appreciate it. We appreciate it, I'll say thank you. I know there's 44 people watching at the moment, even though we've been gone on for 42 minutes. But make sure you hit the like button before you leave. It would be massively appreciated.
Yeah.
And I might even come and give you a hug. Or just not. That you can pay me to not give you a hug. That's the better way to go about it. Right. Okay. Good, guys. Well, look, thank you very much for jumping on as well. And obviously, we'll keep you up to date every day this week with what's going on in the crypto market. And I'm pretty excited about it. An opportunity to buy cheaper Bitcoin, I think, is what I'm excited for.
Yeah, I've never held so much cash in my life. Well,
Yeah,
I have. Since I've been in crypto, I've never held so much cash at this moment in time. I am just holding off, waiting for that $12,000 target.
So what, you used to hold more cash when you were robbing banks, were you?
Yeah.
I've never held so much cash. Well, actually, I have. Yeah, there was that one time in Halifax, down the high street.
Yeah.
Better.
Police chasing. Yeah.
Yeah, exactly. Yeah, I'll pay you internet money to leave me alone.
Yeah. I wish they took the money now, though.
Yeah.
They regret not taking it.
Yeah, exactly. Back in the days when Bitcoin was like trading hands for 3,000, something like this.
Yeah. Anyway,
All right.
guys, thank you very much for watching, and yeah, we will see you in the next live.
See you later. Take care.